Hey everyone, Coach Investor here with the first earnings video of this earnings season, and we're starting it off with ASML. Later today, we're going to have Netflix and Tesla as well. I'll try and cover all of those on the channel. Now, with regards to ASML, you might see the stock be a bit red right now. If you looked at the number, you're going to say, hey, it's not such a bad report, it's not such a bad guidance. Because yes, guidance for 2024, it's basically going to be flat, but they expect growth to be pretty strong in 2025. So for those long-term investors, I mean, it's in the name, long-term investors. Don't look out for the next 2 quarters, look out for the next couple of years. Now, if you want to know a bit more, last quarter, this was the expectations. So they expected third quarter sales to be between 6.5 and 7 billion euros with a gross margin of around 50%. They also expected R&D costs to be around 1 billion euros and SG&A costs around 285 million euros. Due to strong DUV revenue and despite the increased uncertainties, ASML expects strong growth for 2023 with a net sales increase towards 30% and a slight improvement in gross margin relative to 2022. And guess what? They are still expecting that 30% growth for 2023 despite all the uncertainty, despite all the downward cycle that we're in. So it's pretty good in my opinion. Yes, 2024 is going to be weak-ish, but hey, I mean, we've been hearing a lot of negative things for years and years, and still they're able to grow 30%. So maybe they'll surprise us in 2024. Now, if you have been following the news around semiconductor industry, lithography, etc., you know that we had this announcement from Canon itself. So nano imprint lithography semiconductor manufacturing system that covers diverse applications with simple patterning mechanism. Basically, they are coming out with their own competitor, let's call it, to what ASML is offering. Now, okay, great announcement. I think the stock got hit on the same day, but let's wait and see if it can perform as well as the ASML products. Because otherwise, why would existing clients switch from ASML to Canon? Why would new clients not choose ASML for Canon if the results aren't better for the price they're getting, probably? Remains to be seen, but keep an eye on that. Now, if you enjoyed this type of video so far and want to have more earnings videos throughout this earnings season, make sure to like this video and subscribe. We're on our way to reach 30,000 subscribers, so thank you very much for all the support. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, the numbers for this quarter. Q3 net sales of 6.7 billion euros, so in between their own expectations. Gross margin exceeded the expectation, is now at 51.9%, and net income 1.9 billion euros. By the way, this is the net sales are down quarter over quarter, net income is flat quarter over quarter. Quarterly net bookings in Q3 was 2.6 billion euros, of which 0.5 billion is EUV. And they expect Q4 net sales between 6.7 and 7.1 billion euros and a gross margin of between 50 to 51%. And as we said before, ASML confirms its expectations to grow net sales towards 30% in 2023. So, let's have a look here. Now, the worst number is net bookings, a huge decrease quarter over quarter, and I believe year over year it's also down something like 60-70% or so, so not that great. But we knew that the backlog last quarter was 38 billion euros, so for this quarter we're still at around 35-ish billion euros. So even if they're going to experience a lot of headwinds for even a year, I mean, they still have that 35 billion euros backlog, which should definitely help them in that down cycle that we're in. So keep that in mind. As for the rest here, gross margin actually improved a little bit quarter over quarter. Gross profit is down a little bit quarter over quarter. Net income is down as well. And EPS in euros is down as well quarter over quarter. Now, with regards to the outlook, that's probably the most important part here. So our third quarter net sales, we know the numbers. The semiconductor industry is currently working through the bottom of the cycle, and our customers expect the inflection point to be visible by the end of this year. Customers continue to be uncertain about the shape of the demand recovery in the industry. We therefore expect 2024 to be a transition year. Again, I'd like to reiterate here, just because they are saying right now that they expect 2024 to be a transition year, does not mean that suddenly their customers will not be able to increase their orders. No, maybe they will find out that, well, the state of their company or maybe the economy is becoming better and better, and so they might be increasing their orders. Could be. On the flip side, could be also worse. Continue here based on our current perspective. We take a more conservative view and expect a revenue number similar to 2023, but we also look at 2024 as an important year to prepare for significant growth that we expect for 2025. We expect fourth-quarter net sales between 6.7 and 7.1 billion euros with a gross margin between 50 to 51%. ASML expects R&D costs of around 1 billion euros, a bit more than that, and SG&A costs of around 285 million euros. ASML confirms its expectations for strong growth for 2023 with net sales increasing towards 30% and a slight improvement in gross margin relative to 2022. So in my opinion, not that bad for a headline bad year. With regards to the dividend and the share buyback program, the interim dividend is still €1.45, will be payable November 10th. And in the third quarter, they repurchased around 100 million euros worth of shares. I believe it's a bit less, way less than last quarter. And by the way, if you wanted to see what their share buyback history is for the last couple of years, here it is, quite a nice increase, a huge increase after that huge bump during the pandemic. I mean, if they're able to do that and still grow the business 30%, why not? And so currently this is where we stand right now. Market cap of $239 billion. Of course, depending on how much the stock drops when the market opens, expect that number to be probably a bit lower. But other than that, yes, you are not paying a cheap valuation for this business. Right now, forward PE of 29 times. Expect that to change a bit when the market opens, so all those numbers will be adapted a little bit. But still, you're paying a premium price because this is a premium company. This is a very, very solid company. You might even call this a company that operates in a monopolistic environment. So yes, you are paying a premium, especially if you compare it to other companies that operate in the semiconductor industry. But if you look at the last 5 years and the valuation right now, you can see that we are lower. Of course, we are now in a down cycle, but let me remind you, they still have 35 billion euros worth of backlog. And it's not like this company has stopped working right now. No, they're going to continue to operate and grow, as they said, 2025. So do with that information what you want. Jumping to the graph real quick, we can see that since July until their lows back at the end of September, the stock dropped around 22-23% or so. Since then, we had a small rally that could be erased completely depending on how much this stock will drop when the market will open. Of course, we had the bad news with regards to exports to China, etc., etc. Yes, this is still something to consider, but I think the news here, the fears are overblown. I think if you're a long-term investor, I mean, yes, short term, this might cause headwinds. We've talked about this in the past as well. But in the long term, I don't see really how this is a huge, huge issue for a company like ASML. Currently, I mean, if it drops back to around 580, 590 or so, I mean, why not? In the meantime, you can keep on accumulating dollar cost averaging. If it goes lower, which in my opinion, I don't really see why it should go lower than before. We got a bit more clarity right now. Yes, 2024 is going to be a bit flat-ish. So, okay, maybe the market will punish it for that. And worst case scenario, we go back to the lows of at the end of 2022, which was around 550. Again, don't always put all your money in after the earnings report. The market does take a couple of days to, let's say, look at the numbers better and then have a better reaction. So that will be it for this video. Of course, do share your thoughts down in the comments below. I know a lot of you hold ASML in your portfolio. I know a lot of you understand the business and understand the short-term issues won't really impact the long-term success of this company, but do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.